Once again, a warm welcome to all FADA members present in this taxation series webinar. Good afternoon to one and all. This is Saharsh Damani. I welcome on behalf of FADA, I welcome all of you to this taxation series webinar, especially on the GST issues, which we are calling GST issues dealer's perspective. As you know, GST has been an ever evolving subject, and for the auto retail industry, it is one of the biggest pain areas for the auto dealers, for the dealer principals and their finance staffs. That's the reason to keep abreast with what's happening in GST, what are the changes coming in, how do we handle notices which are currently in fashion in many states. That's the reason why we are doing this webinar, so that we can handhold you, we can make you prepared, and to take this session forward, I would first like to welcome our president, Mr. Manish Raj Singhania. Welcome, Manishji. Along with him, I would also welcome Mr. Jatin Harjai, our GST expert, and he has been a long old friend of FADA. Welcome, Jatinji. The session will be in this format. We have already taken questions from all the members. They have been given to Jatinji. He has already filtered them out, and most of the questions will be taken care during his presentation. But I'm sure there will be a lot of queries still which members will be having. That's the reason why we have a Q&A box. So you can keep posting your questions in the Q&A box, and we'll take those questions once the presentation is over. And I'm sure by the time the session ends, most of the queries will be solved. But still, we'll try to see within time how do we take up all the questions. And with this, Manishji, I will request you to share your welcome address, and then we'll move to Jatinji. Over to you, Manishji.
Good afternoon, everyone. A warm welcome to everyone. What Sir just now said, all your queries would be solved. I seriously doubt that. And I think Jatin will agree to me on this. Introduction and launch of this GST has been a very complex thing. And till now, till date, every businessman across India, whether it is auto or other streams, they are just trying to understand how to go about it and what are issues. Every time we are seeing an entirely new issue coming up in GST, so it's been very tough for us. And law is, I should say, it needs a lot of clarification. We have also taken this initiative as an association to empanel. We had empaneled in the past GST consultant and counselors so that we are able to reply or address to all your queries that you raised through your association and give a kind of practical and usable solution to all your queries. And in the past, we had Mr. Dr. Sanjeev Agarwal, and with changing times now, we have now empaneled a very young person, Mr. Jatin Harjai, and I think he was the first person when this GST was launched. We had tied up with Jatin, and he had went to I think 10 or 12 states across India, and we had had some seminars to understand get an initial understanding of what GST is all about and how to go about it. So he has been a long time partner with us, and a very well qualified person. He has been associated with a lot of various kind of committees and advisory role, and definitely when you hear him out, you will understand the command he carries over, and a fantastic understanding he carries over this GST law. Obviously, as a lawyer, as a consultant, still it kinds of mystifies him also, GST. He's fighting his own battle. So I won't take much of time now here, and I hope that this seminar will be helpful to our FADA members, and we'll try to regularly create solutions for whatever are issues and problems of this industries. So thank you, everyone. I won't say enjoy the seminar, but take good learnings from this webinar, and it will definitely help us improve our businesses. Thank you. And over to Jatin now, please kindly.
Should I start?
Yes, Jatin ji, please.
Okay. First of all, Manish ji, President of the FADA, Sir ji, Indra ji, Richa ji, all viewers, a very good afternoon to all of you. Thank you for nice words, Manish ji, Sir ji. Let us see what is going to happen in next 2 hours or 2.5 hours time. But one thing is sure, I would like to start my session from one of the quote from Benjamin Franklin, which said, "In this world, nothing can be said to be certain except death and taxes." So two things are only certain. One is death. Second is taxes are to be there. And the moment taxes are there, believe me, the collectors of the taxes wants to collect more and more. The person who is going to pay tax wants to pay less and less. So the person who is going to pay tax or the one, it is a burden on the pocket of the person. They are going to try certain loopholes. They are going to try maybe ways out so that there can be minimum taxes. And the vice versa is there with the government, who's a collector of the taxes. And we Indian minds are superbly known for the maybe reading between the lines, maybe taking different kind of interpretations of the same line. So that is why we all are here. Same thing happens with the government officers as well. They also take a different meanings from a simple sentence or maybe simple legislation. So let me start sharing my presentation as well. I think you can see this now. Is it visible? Okay, fine. So as Manish rightly said, I'm in touch with FADA since 2016, even prior to implementation of the GST. We did a couple of workshops. We sent a couple of representation to the government wherever there were some challenges to the dealers. And we have seen some of those recommendations has been accepted by the government as well. But it's a continuous process. We are going to have certain issues. We are going to address them, maybe through judiciary, maybe through the government. I'm sure by the time things will get smoothened. For today's session, I have chosen maybe some 4 or 5 specific points, which each and every dealer struggles with, maybe faces, or maybe issues notices, maybe their teams are in double set of mind that what should be the proper call. So these 4 or 5 items you may see in my agenda, which are in relation to some of things we can call it as a merit issues. That these are the tax issues which are coming to our mind. Apart from this, I just want to sensitize all the dealers or maybe all the viewers that how to deal with couple of things in the investigation or when the authorities came at your place for search or maybe inspection or maybe some kind of audit, then how you should handle these things when it is coming in front of you. Because many a time we have seen when the tax authorities are there at the dealer's premises or be it any business premises, then they work or maybe they look like in a very, very authoritative manner, which may not be correct, which is not lawful to do. So how one should handle, or one basic, you can say some of the basics of your rights you should be aware of. So I will touch upon them as well. With as Sergi said, we will take up around 1 hour 30 minutes time on this presentation. Then we will take up Q&A. So let us start from the most contentious issue of this industry, which is the demo car. Please mind, I'm not going to discuss what either of the advanced ruling has said. Firstly, we need to understand what the law of the country is, whether advanced ruling is a law. My clear answer is no, advanced ruling is not the law. It is the law only and only for the person who sought it. For example, there are 1 crore dealer in India. 1 crore registered taxpayer in India, and one of them has taken advance ruling. So that whatever decision or ruling has been given in order under section maybe 99, 97, that applies only and only to that person only, not to anyone else. And commonly compare this advance ruling with maybe an income tax assessment, by which you can easily understand that. The advance ruling authority is limited to kind of an assessment which has been done in a Tamil Nadu for a person who is sitting in Calcutta. Let us say you are a dealer sitting in Calcutta. You are getting your income tax assessment done. Can you or maybe the assessing authority cite an example of the other income tax assessment happened in Tamil Nadu? Answer is no. You can give as a precedent your High Court judgment, Supreme Court judgment, but not of the peer, maybe ITO or maybe Assistant Commissioner judgment. So this advance ruling has only that kind of presidential value, not more than that. So I'm not going to discuss any of the advance ruling. What the law of the land is, Constitution of India, Supreme Law. Then as far as GST is concerned, CGST, SGST, IGST Act on the Compensation Cess Act. Thereafter, rules made thereunder, notification made thereunder. High Court judgment, Supreme Court judgment. That's it. This is what the law of the country. Please mind, even the circulars are not the law of the country. If someone wants to refer, please go to the very famous judgment of Bengal Iron, judgment of Honorable Supreme Court, para number 18 of which is in crystal clear terms says, circulars are not the law. It is merely an opinion of the government about the law. That's it. So even circulars are not the law. These basic fundamental must be there in our mind. So with this fundamental, let us start with the issue of the demo vehicles. I will deal in two parts. First, very short and quickly, whether ITC is eligible or not. In so many forums or maybe a seminar arranged by the FADA itself, I have in crystal clear terms said in my humble opinion, credit of the demo car is available. I will just explain what the reason is. But the important aspect is whether you should take it or not. That is a different call. So one is eligibility. Second, should you take it or not? So I will take you through some couple of practical examples why we have seen that the dealers has maybe not fair in dealing with the demo cars aspects. Maybe they have damaged their own costing. I must say in this manner. Let us go one by one. Firstly, section 16 subsection 1 of the GST law says, if any of the registered person has incurred any kind of expenditure or received any supplies on which input tax is charged to him, and those supplies, those respective supplies are being used in the course or furtherance of its business, then the credit shall be eligible. This is what a general phenomena or the, we can say, core of the provision of the input tax credit under the GST law. Now, important aspect is, what is this input tax? Input tax is defined in section 2, subsection 52 to mean any GST paid on your inward supplies, be it CGST, IGST, SGST, whatever you have paid on your business supplies, those all are input tax. Whether it is a food, whether it is car, whether it is healthcare, which is being used for the purpose of the business, is an input tax. So basic, the core of the law provides that you will be eligible to the credit. Then there is a restriction over it. So restriction starts with a non-obstante clause. That means if you fall into restriction, restriction will prevail and general rule will get set aside. Now this restriction says that credit of the motor vehicle will generally not be available. Motor vehicle, it says, notwithstanding anything contained in section 16(1)(18)(1), ITC shall not be available in respect of following. Number 1, motor vehicle for transportation of a person. Now we fall in the moment we are buying a passenger car, which is to be designated as a demo car or which is being designated as a trial car kind of thing. We are getting in fall in this clause A, because we are getting this is a motor vehicle. Now law says, except when they are used for making following taxable supplies. So now there is a exception to the negative list. That means if we are falling into that exception, we will come out of the negative list. That means credit shall be eligible. Now it says that this motor vehicle, if it is used for making further supply of such motor vehicle, you purchase X item, you are selling X item. This such word is important here, which is not there, unlike clause B, which doesn't use this phrase such. So what it is saying, you are purchasing X item, you are purchasing you are selling the same X item as far as motor vehicles are concerned, then the credit shall be eligible. Now we need to understand what is nature, what is core or a work, what is basic nature of a demo car. Why the demo car is there in the business of automobile trade? Or can we say, is it the only trade in which the demo product is being used? Answer is no. If you go to maybe a mobile shop, you go to iStore, Imagine Store, what's going to happen? You are going to purchase a particular model of iPhone, for example. Similar model iPhone will be there for a display. Why this kind of demo practice is there? So that the product which may get damaged or which may get kind of a scratch, for which user won't like. So businesses has a practice to have a exception or maybe a particular product which is to be identified. Okay, we will give a demo or a trial on that particular vehicle or that particular product, whatever it is. And then we are going to sell it at a later point of time. I'm sure each and every one of you will agree with me. Demo car is not there to stay with the dealer. Ultimately, it is going to be sold only. The objective is it will get sold after maybe given some demo or trial rights. Maybe after 6 months, maybe after 1 year, maybe after 1.5 years, hardly matters. Time frame doesn't matter here. You may note one of the very important judgment of Honorable Supreme Court. Whatever has been said is equally important to whatever has not been said. So in this particular exception, the law does not mention any time frame. In how much point of time, at what point of time, or within what time frame you need to use it. No, it's not mentioned. Law simply says when they are used for making further supply of such vehicle, rents. You are purchasing your fleet, which are going to be sold immediately, or the fleet, or you are purchasing a vehicle which is getting sold after 3 months. You are purchasing a vehicle which is going to sell after 1 year. They are at the same pedestal as far as exception given in clause A to section 17(5)(a) is concerned. So in my humble opinion, there is no reason that the input tax credit should be denied on the demo cars. I'm aware that conflicting advance rulings are there, but as I have discussed in pretext, I'm not going to address those because they're neither favorable nor against. None of them is precedent. Ultimately, the law prevails, and the logic is, which I have said, without barring any time frame, the law doesn't provide any time frame for a exception, for falling in an exception to the restriction clause. So the credit shall be eligible. This is what my opinion. Now let me take you to the second part of this particular issue. See, while we conducted review of so many dealers pan-India basis, this was one of the item whereby, as I said earlier, the dealers were, or maybe I would say the team of accounting or the finance team of dealers has not taken in a true spirit. Rather, they were very, very defensive on it. And the cost incurred on account of demo vehicle was much, much more than that. So just to provide a value addition, I'll just share with you the real facts, absolute real facts with the correct which we find in at the time of review of some of the dealers. I'm just quoting some of the example. Then I'll tell you how the dealer can be benefited out of the different accounting treatment only. Just for an example, this is real fact. Let us say the dealer has purchased this vehicle, which is designated as a demo car. Base value 17,28,000. GST applicable was 7,43,000 on this. Now, what the dealer did when we did the review, this was invoice of 1718. What the dealer did is they made a self invoice on their own. Couple of places we have seen that the self invoice is being made on their own name. Couple of places we have seen that it is being made in the name of the maybe director, referee, because system was not permitting the same name. So maybe in the name of director or otherwise, some other employees are GM kind of thing, and they are putting up their in a capex in the company's name. So this is what a fact I'm sharing it with you. See, this is what happened when we find this is what the vehicles, and they made a self invoice maybe slightly higher than the purchase price. So you can see at this screen, 17,28,000 is the base value. Then they made a self invoice for 17,63,000, paid GST accordingly. Now what they did is they claimed credit of this purchase invoice, 7,43,000 they have claimed the credit. And then this outward invoice, this self invoice was being reflected in GSTR1, that means as an output supplies, just like you sold it to someone else. And this 7,58,000 was treated as an outward supply. And ITC on payment of purchase of that vehicle was utilized in payment of this particular tax liability. So if I go by mathematical calculation, cash cost of that vehicle to the dealership would be 24,86,000 in this particular case, because 7.28 must be paid to the OEM. 7.58 is the effective GST in it. So you may note it that the cost of the vehicle, cash cost of the vehicle to the company will remain, or the dealer will remain 24.86 in this particular scenario. Now, what we have seen further is, while selling this car, this is again a absolutely real numbers. This car was sold in 2021 by the dealer. Normally, when a dealer sells the car, the deal with the buyer is always inclusive of GST. Plus GST kind of dealing is not there in this particular trade. So the deal with the buyer was, okay, 16,58,000. This is what negotiated price with the customer. So on a reverse mechanism, on a reverse calculation, the dealer paid the GST at the rate of 43%. That means whenever I'm saying 43, that means the base rate, which is 28% plus cess, whatever applicable cess is there. Now here I have just given some round figure to the numbers anyways. So now in this scenario, what has happened, if we calculate how much is ultimately cost of this particular demo car, which dealer has borne, would be 24 lakh rupees the cost, and ultimately what realization is there from is 11,59,000. That means total 13,27,000 will be cost of demo car, which borne by the dealer. Please mind, I have ignored registration insurance charges and any of the incentive or a contribution which has been received or which might have been received on the purchase of demo car or identification of a car as a demo car. Different practices are there in different dealerships as per different OEMs. So I'm ignoring all these costs, all those costs which are which will be there in all the cases, like registration, insurance, and maybe any incentive or a contribution by the OEM. I'm ignoring in all those cases. Now I'm giving you a second example which we find. In second set of dealer, what they have done is, same numbers I have taken for the comparative study. What they have done is base value same, 17.28, GST charge 17.43. They made self invoice exactly in the same. So cash cost of the vehicle at that particular point of time is 24.86. As in the earlier case. Now here, what the dealer has did at the time of sale, which is different, that what they use the margin scheme. You all are well aware with the margin scheme, which is provided in notice number 8/2018 central tax rate. which says that if it is a used car, in that case, you can pay the taxes at the rate of 12% or 18%. There are two different slabs as per the engine capacity. On the margin is sale minus purchase price, sale price minus purchase price. So this dealer has utilized this one and paid the taxes on the margin calculated as per the income tax calculation, which is there in the notification number 8/2018. Now, if you'll see, the cost to the dealer remained 9,36,000 in this case, as compared to the earlier dealer, which is ABC dealer. Now, this is a PQR dealer. So, when the ABC dealer paid tax on whole of the supplies as treating as a fresh supply at the rate of 43%, the cost came 13,27,000. And to the cost to PQR dealer came at 9.36 lakhs. Whether dealer PQR was correct on law part, let us check that. What kind of risk is involved into it. If you'll go to notification number 8/2018 central tax rate, you will find there is a condition. It clearly says this notification shall not apply if the supplier has availed input tax credit as defined in clause number 2 subsection 63. 263 says input tax credit means credit of input tax. So if you have taken ITC, in that case, this notification, that means benefit of the margin scheme shall not be eligible. Now let's get back to this dealer 1, ABC dealer. Now, please mind here, in this case, what that dealer actually did, when he got a purchase invoice, he actually claimed this 7,43,000 as his ITC in 3B. Now, the argument from the dealer side is that actually this is a self-invoice and it was not a supply. So I was not supposed to pay the taxes of this 7,58,000 because it's a kind of hypothetical supply. I have not sold it to anyone else. And I utilize this 7,43,000 in payment of that hypothetical taxes. So effectively, I have not taken any credit. In principle, I am with dealer ABC. In principle, I am with dealer ABC. But please mind, he has actually invited a lot of litigation on it. Because this is a notification number 8/2018 is an exemption notification under section 11. And law is very much settled as far as exemption notifications are concerned. Please refer judgment of the Leap Singhs, which Honorable Supreme Court, which clearly says that if there is an exemption notification, each and every condition has to be strictly adhered to. If you are not adhering to any of the condition, you will forgo the exemption. Exemption will not be available to you. So precisely in my humble opinion, the conceptually dealer ABC may be correct. But he has invited this other dealer PQR may be correct. But this, while taking benefit of this margin scheme, probably he has invited so much of the litigation on his part, which may not get end before High Court. So that means adjudicating authority in no case will accept his claim. First appellate authority, I'm sure they will not accept. Maybe some chances are there at a tribunal level or at a High Court level to understand that ultimately there is no loss to the government as taker, and it is only a matter of procedure which is not being followed correctly. Otherwise, tax has been paid correctly. So this was a second dealer. But the issue is, when we discuss with the dealer, the ultimate issue was with respect to self-invoicing, because they wanted to invoice the vehicle so that they can get the vehicle registered. So I want to discuss that particular aspect first here, whether self-invoicing is at all required. Whether GST law requires a self-invoice. Please mind, GST law talks about supply only. What is supply? The moment there is a supply, invoice is required. As per section 31, the moment there is a supply, you need to raise an invoice. But what is supply? Supply under the GST law is not defined scope of the same has been described in the GST law, which clearly says until unless it is for a consideration, it will not be treated as a supply for the purpose of GST law. Now, what is a consideration? Consideration has to be consideration is something paid by one person to another. So essentially, GST law requires existence of two persons. Until unless there are two persons, there cannot be any supply. GST law itself provides some deeming fiction under section 24, subsection 4 and 5 to say that these will be deemed to be a person. So at least there has to be a two persons, whether real or whether deemed. So in this case, whereby a OEM is selling a vehicle to the dealer, cannot be set is definitely a supply. But when the dealer has received that particular car, he is designated a vehicle to be a demo. It cannot be said to be a supply because there is no consideration. There are no two persons. There is no transfer at all. There is no sale. It cannot be said to be a transaction of supply. Accordingly, no invoice is required to be made by the dealer at all as per GST law. This is what as per GST law. Now, the second question comes, whether any other law requires making of the invoices in this particular transaction, that a dealer has received a car from OEM raised the invoice. Now, dealer is treating this car as a demo car. Whether any of the law requires, my answer is no. Even if you'll go through with the Sale of Goods Act, then also it doesn't require. When we discuss with the dealer, then why you make this kind of self-invoice? So the customer practice which we identified is that because when they go to register this particular demo car in the name of their company, in the name of their dealership, then RTO asks for a invoice. Without that, vehicle are not getting registered. That was the issue. That was the point from where this self-invoicing system has started. Now, let me examine this aspect in a maybe double sense on a two filters from the motor vehicle point of view, Motor Vehicle Act point of view. First of all, whether as per law, registration of demo vehicle is required at all. If we'll go to section 39 of the Motor Vehicle Act, it says each and every vehicle which is to be driven on the road has to get registered first. But there is an exclusion to it. If you'll go to this particular slide, it says section 39 proviso says, provided that nothing in this section shall apply to a motor vehicle in possession of a dealer. That means if a dealer is possessing a particular motor vehicle, this section will not apply, subject to such condition as may be prescribed. Now, these conditions are being prescribed in the motor vehicle rules. It says that you need to, for a prescribed condition, if you are holding the vehicle with a trade certificate, in that case, registration of vehicle is not required. And this is what a utilization of the trade certificate, which has been explained in Rule 41 of the Motor Vehicle Rules. And probably if you go through with it, it is comprehensive enough to take care of all requirements of the motor vehicle. Maybe a test ride, maybe some demonstration, maybe for workshop, maybe for you are taking it for some exhibition or etc. All kind of activities which is actually required for the demo vehicle are getting covered in this Rule 41. So precisely as per law, as per motor vehicle law, in my humble opinion, registration of the demo vehicle is not required at all. They can go ahead with the trade certificate, or maybe at some places different nomenclatures are being used. Trade plate, many people says it. So this can be, vehicle can be retained by the vehicles as a demo vehicle without even registration. Number two, let us assume even if someone wants to get this vehicle registered, whether registration of a vehicle requires your self-invoicing. Rule 47 deals with this particular aspect. It tells us what kind of documents are required for the purpose of registration of the vehicle. please check, it nowhere contains sales invoice of the vehicle. So precisely speaking, as per law, sales invoice is not required for getting the vehicle registered with RTO. What is required is sales certificate. And now, who is going to make the sales certificate? Sales certificate can be made by the dealer himself or even by the OEM. That means manufacturer. So if you want to get your vehicle registered, you can have a sales certificate from the manufacturer direct, and you can register your demo vehicle with RTO on the basis of that manufacturer certificate. So I have advised all these things. Maybe a couple of the participants must have been agree with it. I have advised to many. Some were looking at it like a strange thing at the initial stage. But by the time, I can say so many of my clients has shifted to this aspect whereby either they are not getting the vehicles registered or they are getting the vehicle registered with the sales certificate of the manufacturers. So I have explained this aspect so that if you are still in a loop of that getting your vehicle, you're getting self-invoice generated due to the reasons that you want your vehicle to be registered. So you can evaluate your decision or a position on both these aspects, that first of all, it is not required at all. Number two, even if you want to get it registered, then it can be done even without self-invoicing, because self-invoicing is creating a big challenge under the GST credit mechanism. Now, let me give you, with this kind of introduction from the Motor Vehicle Act, let me give you an alternate treatment whereby a dealer is not going to make a self invoice of the demo car. Same facts, same figures I am taking for the better understanding. Let's say same value, OEM has charged the same GST. Now the dealer has not raised any invoice. The dealer has not raised any self invoice, and maybe dealer has capitalized those particular that particular car, and ITC also has not been claimed. They have not claimed ITC at all. In that case, what will be cash cost to the dealer? It will be 24,71,000 because there is no markup at the self invoice. So the cash cost of the vehicle to the dealer is 24.71 lakhs at the time of procuring the same. Now let us the same scenario that the same vehicle is being sold to the consumer at 16.58 lakhs, the same price, because the deal with the consumer buyer will be that inclusive of GST only. In that case, you are going to raise your invoice, calculate the GST in a reverse manner, and we are having a 15.50 of our net sale consideration with us, because that amount 1,08,000 will deposit to the government. Please mind, expenses on account of demo car in this case will come out to 9.21. First scenario, when I discussed with you, it was 13.27 lakhs. Second scenario, when I discussed it with you, it was 9.36 lakh, but there was risk involved. Because in that scenario, you have taken ITC in GSTR3B, lots of litigation is bound to come. Now, I'm suggesting you the alternate treatment whereby you are not going to raise any invoice, and the cash cost, the ultimate cost on account of demo car would be 9,21,000. That means least of them, without any kind of litigation. No litigation is invited into this. Now, let me give you the fourth and the optimum treatment to this. You received this demo car, you purchase this car at the same price. You have not raised any self-invoice, and rather you have claimed credit of this one. On the same time, utilize this ITC in making payment of the other taxes. So, effectively, cost of the vehicle to you 16,58,000. But now what's going to happen, since you have already taken the ITC? In this case, margin scheme will not be available. So you are going to pay tax at the rate of 43%. Hypothetically, I'm taking same tax rate, same amounts, just to give a fair comparison. In this case, you will see the total cost of the vehicle to the dealer will remain 5,69,000, which is going to be a least, I would say, 5,69,000. But the assumption here is that the credit I am eligible. Credit for this product I am eligible. There is no bar. If you're not treating it that, then alternate treatment 1 may be useful for you. But in my humble opinion, in this case, when your expenses are getting reduced to this extent, remember in first case, that was a live case which we have seen in one of the dealers' case, 13.27 lakh. In the another case, it was 9.36 lakh. In the third case, which I suggested, was 9.21 lakh without any litigation. In this case, the overall cost remains 5.69. Almost half of the cost which actually been occurred by the dealer. In this case, there may be issues, there may be questions, but ultimately you are getting this much of the benefit. And with this, I think I can conclude this demo car saga and may come up to the other issues. We'll take up, if anything, on demo car. I'm sure that there will be certain questions on it. If any of them are there, I'll take it up in a Q&A session. Now, let me talk a bit about these promotion items. In these days, whatever audit has happened of the dealers, we have seen the department has raised a audit para or raised a show cause notice for the input tax credit which they have claimed on a product or articles which they procured for giving it to their customer, or maybe as a FOC product or some other way. The gift kind of thing is given of those products. So we have seen so many queries from the clients on this, that these kind of credits are not being allowed. Let us just quickly go through with them. 16.1 is same. If you are procuring anything, GST paid, and the items are being used for your business or furtherance of your business, credit is eligible. The article which we are talking about is absolutely for the business use. Now, rider comes again in section 17, subsection 5, clause H. Now, what clause H says? It says, with a non-obstante clause, input tax credit shall not be available in respect of goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. Meaning thereby, even if it is for the business use, but some goods which are disposed of by way of gift, credit shall not be eligible. So let us examine this particular situation in a case study form again. Let us say there is a Diwali coming up. So dealer comes up with a offer. The moment you will purchase a car, there will be a LCD free with it. I'm not discussing what kind of contribution the OEM is giving or not giving. So that will not be having any repercussion on our decision on claim of ITC. So there is a Diwali offer running on purchase of a car, or when a consumer purchases a particular car, LCD will be free. This is what a kind of advertisement is there. Now the question is, when you purchase that LCD, you paid certain GST on it, whether credit of that GST is available or not. This is what a simple question. 16.1 says credit is eligible. We need to examine 17.5H. H says, if any of the goods is disposed of by way of gift, no credit. What is goods? Section 2, subsection 52 tells us, movable property of any kind is a goods. So whatever gift you are giving it to the customer, any of the article, all are goods, which is movable in nature, these all are goods. You have disposed of, yes, you have disposed of. By way of gift, we need to understand whether it is a gift or not. What is a gift? What is a gift? We need to understand it. When you are saying someone to purchase a car, then I will give you a LCD as a gift. Is it gift in real sense? The gift may be when maybe without any obligation. That, okay, someone is meeting some other fellow and giving a maybe LCD as a gift. You are going to your relative's place. You are taking a LCD. That is a gift. There is no counter obligation. In this case, LCD is being given with a rider, with a condition that first you will have to purchase a car from me, then only I'll give this LCD to you. Until unless, no LCD. If Jatin Harjai is coming to your showroom, you are giving LCD as a friendly gesture. then it may be a gift. But if you are taking a condition, if you are making a rider, okay, Jatin Harjai has to first give some kind of advices, then only you will give a gift, then only you will give LCD, then also it's not a gift. So please try to understand, gift is never a gift cannot obligate other party or the recipient to perform something. If it is being done, it is not a gift. For some referral purposes, I have placed section 122, which defines gift in the transfer of immovable properties, TOPA Act. It specifically says gift is the transfer of certain existing movable or immovable property made voluntarily and without consideration. Please mind, consideration may be monetary or non-monetary as well. So, if there is any kind of act, if there is any kind of condition, it cannot be said to be a gift. If it cannot be said to be gift, in my humble opinion, 17.5H doesn't get triggers. And in all, you will be eligible to get credit of those particular GST which you have paid on procurement of these articles. There should not be any issue into it. More specifically, in similar kind of thing, not identical, but in a similar kind of thing, circular also clarified this aspect in circular number 92/2019. In the context of buy one, get one free. Kind of, you'll go to so many garment shop. Normally in cars, it doesn't happen that you buy one car, you'll get another car. But in the another context, like you are going to a garment shop, you are going to buy one jeans. The offer there is, okay, you buy one, get another free. What does that mean? Whether the second is actually free? Answer is no. First, you will buy first. This is what the condition. Then the second will be available to you. Not otherwise. So this aspect has been discussed by the CBIC itself, which says buy one, get one is actually not a free. If you go to this underlined portion, which on the slide, it clearly says it may appear at the first glance that in the case of offers like buy one, get one free, one item is being supplied free of cost without any consideration. In fact, it is not an individual supply of free goods, but a case of two or more individual supply where a selling price is being charged for the entire supply. The same preposition applies to us as well in the case which we are discussing. In the first, it may appear that the LCD is giving free, but actually the dealer has charged for the combo. Nothing is free. In this very sad circular, CBIC itself clarified that ITC in respect of that item, so-called free item, will be eligible. ITC will not be restricted. Now, let me give you another example. Let's say you got some articles just like LCD or maybe some showpiece or something else. And now there is a festival Diwali. You are giving it to maybe your friends, some officers, or maybe some other persons. Maybe to the prospective customers as well. Without any counter obligation. Whether credit eligible? In my humble opinion, no. In these, unless there is a counter obligation, that item has to be treated as gift. And the moment some goods is disposed of by way of gift, there is a non-obstante clause in section 17, subsection 5, clause H, and that will get triggered and no ITC will be eligible in that particular scenarios. Now let's go to next item on which I got queries as well. Telephonically, I received this 2 queries on this. So I'm covering this write-off of outstanding balances. Many a time what happens, dealers are having some credit balances which they write off. The moment they write it off, it will appear in profit and loss account as income. Now the question in the mind of the dealer is whether I'm supposed to pay GST on this income or not. Let me start from the basics. Please mind, GST is not a tax on income. GST is a tax on supply. You may take profit and loss account as a base statement to understand, to check whether taxes are correctly paid or not, as a tool. But it cannot be conclusive that something is coming in a credit side of the P&L account, the tax has to be levied. Answer is no. It may be your income, but not necessarily your supply. So we need to identify whether this particular credit entry in the profit and loss account, that is income, is getting character of the supply or not. So we need to understand this aspect. I'll just take you through just a couple of statutory provisions. Law talks about that GST will be levied on supply only, supply of goods or services. Services are defined to mean anything other than goods is a service. One entry you may just note it down with you, Schedule 2 entry number 5E, because so many times government officers cite it. It is very, very wide entry which says following item shall be treated as supply of services, agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. That means if you are agreeing to do an act, if you are agreeing to tolerate an act, if you are agreeing to a particular situation, if you are agreeing to refrain from doing an act, everything is supply of services. This is what has been prima facie said by entry 5E. And then the departmental officer says, okay, then since it is a supply of services, it gets covered in the levy provision. That means GST levy gets attracted on it. So first of all, whenever any officer or any of your maybe colleague or you are identifying a particular nature of a particular transaction or an income, whether it is a supply of service or not, before you go to entry 5E of Schedule 2, please mind one very important aspect. You cannot start from 5E. This is what law of the land. Why I am saying so? Please mind this 5E is an entry of Schedule 2, which used to be part of the scope of supply, which used to be, but it is not. With a retrospective amendment with effect from 1st July 2017, the lawmakers has specifically deleted this. Earlier, within the scope of supply, there were 4 entries. Fourth entry, that means the clause 4D was there, referring Schedule 2. That means whatever entries are there in Schedule 2 will be deemed to be a supply. This was a basic initial entry. But when government get to know the repercussion of it, they deleted this entry and came out with a separate entry, which says, firstly, a transaction has to be a supply as per section 7(1). And once it is a supply, then whether it is a supply of goods or service, then for that purpose, you can go to Schedule 2, not otherwise. So the reference to 5D can be made only and only for classifying a particular supply to be of a goods or service. But whether it is a supply or not, you cannot use it. This is what the statutory provision under the GST law. With this background, let us examine a couple of examples, couple of things, whether it will be treated as a, whether tax should be paid on it or not. First example, a dealer got a booking of the car, which is, let's say, amount is 10,000 rupees. Bhagwan sabhi ko aise grahak de. He booked the car, but never came back. Now, finally, after 2 years, 3 years, as per policy of the company, they return off this particular credit entry. The moment this amount is being written off, what's going to happen? This amount will come as a income in the profit loss account. Now, question in the mind of the accounting team, and when the auditing this particular aspect, auditing the dealer, in the mind of the auditor is GST should have been paid on it. Let me go back to the law, what I discussed. GST is not on income. GST is on a supply. What is a supply? Let us say this 10,000 has been written off in the year 23-24. Amount was received in, let's say, 1920. Can it be said to be a supply? First of all, please mind, when the customer hasn't come back, I made only an accounting adjustment, which may giving rise to an income in my P&L account. But does that mean I supplied something to someone? Answer is no. I'm sure that everyone's answer is no. It's a purely unilateral act of a accounting treatment. No goods, no services are being provided by dealer to any customer. Secondly, please mind, just because you return off some amount in your books of account, does it mean that you are not supposed to pay that amount to the respective person, Mr. A, in this case? Answer is no. Your liability doesn't wipe off just by writing off in your books of accounts. Yes, there are provisions under the limitation law that if this much of, let's say, if 3 years are being expired, no communication is being made by the buyer, no call for payment is being made by him. In that case, he may lose statutory right to claim the amount back. But your liability doesn't go off. You may get an immunity to have a court claim, but otherwise that amount is payable. So, bottom line is, when you write off this particular amount, 10,000 rupees, in this particular fact, please mind, we need to understand the factual aspect. There cannot be any yes or no to the question whether written off is a written off amount is taxable or not. No, there cannot be any straightjacket answer to it. We need to identify facts first. So in the given facts, there is no supply at all. The moment there is no supply, no GST. So in my humble opinion, in the first case which I discussed with you, there is no supply at all. Now let's come to second example. Example 2 is Mr. B booked the car, advance amount 10,000 has been paid, and the agreement or the booking condition is if you'll cancel the booking, then dealer will retain 5,000 rupees as his compensation, as his damage kind of thing. Booking is cancelled by Mr. B at a later point of time. Dealer returned 5,000 rupees and retained 5,000 rupees with him. Question is whether this 5,000 is liable to be GST or not. Now again, whenever you will be discussing if you are going to discuss it with the officers, they might start with 5E. But please mind, I have already told you, 5E cannot be starting point. First, you need to identify what the supply is. If you identify it, yes, this is a supply, and you have a doubt that whether it is a supply of goods or services, entry 5E will help you. But you cannot start identifying supply with entry 5E. Now, here important aspect which one should consider is 5,000 rupees which the dealer has received on cancellation of the contract. Whether this amount has been received as a consideration of some supply or towards damages or towards for contract, for cancellation of a contract. There was no contract between the dealer and the consumer to not give the car. Rather, the rider of this cancellation charges was because of the fact that, okay, the buyer may not casually cancel the contract. Contract is to perform. Contract is not for not to perform. If I'll go to our parent, one of the parent act, Contract Act, Indian Contract Act. Indian Contract Act says when there is there is a breach of contract by one person, there is a contract between two parties and contract is breached by one party, then he is supposed to pay damage or compensation for loss to the other party. This is what a law of damages. Now let us say there is agreement doesn't provide for any amount. Then what happens? Section 73 of the Contract Act gives answer of it. That one will have to evaluate how much loss has happened to the other party. Let's say there is a contract between Mr. B and a dealer. Mr. B cancelled a contract and agreement is silent that how the damage is to be given. Then if B is cancelling the contract, B is under obligation as per contract law to compensate Mr. Dealer. Because dealer might have incurred some expenditure on this contract. For example, he has booked the vehicle, which otherwise might not be saleable, or a slow moving item. So he have to pay OEM that amount. Stock will be with him for a couple of months, maybe. So precisely whenever the agreement is silent, actual amount of damages has to be calculated. This is called as unliquidated damages technically. Again, section 74 is also there in the Indian Contract Act, which says the contract may provide for penalty amount in the contract itself. That if a party cancels a contract, let's say in the same example, Mr. B cancels a contract, the contract or agreement may provide for a penalty or a damage amount. Technically, in legal language, it is called as liquidated damages. If that kind of amount is being provided in the contract, then it will be towards damages fixed amount. Let's say for 5,000 rupees, it is being provided in the contract in this example. Now, whether actual damages is 7,000 or 3,000 hardly matters. For avoidance of dispute, the 5,000 has been fixed by both the parties at the time of booking of the car. So 5,000 is the fixed amount. So this is going to be a liquidated damage. But whatever may be the situation, whether it is fixed or not, ultimately it is towards damages, not for the supply. The same aspect has been considered by the Honorable Bombay High Court in Bhai Mamubhai Trust versus Suchitra. Identical kind of item issue came before the Honorable High Court, and Bombay High Court has said before even the circular came in on this aspect. They specifically said damages cannot be said to be a consideration of a supply. On the similar line, one may refer a very beautiful judgment of Honorable Sestet in case of Repco Home Finance Limited. This is a larger bench judgment of the Sestet, which given a tool to all of us to identify whether it is to identify these particular type of transactions. They have given a distinction between consideration to the contract and condition to the contract. So whether payment of this 5,000 rupee is consideration to do something or not to do something, or it was a condition. So by these riders, by these litmus tests, I am of the firm view that when even the dealer charges the amount for cancellation of the booking, whether it was mentioned in the agreement or not, in both the scenarios, the GST is not chargeable on it. In my considered legal opinion, GST is not chargeable on it. But now the problem is, there is a circular number 178/2022. Now what happened? This issue was majorly of works contract, a large turnkey contracts whereby liquidated damages was involved. And there are so many judgments in the past regime as well, which suggest that, okay, liquidated damages are towards compensation, not towards the supply. So the GST cannot be levied on it. So CBIC came up with a very detailed circular on liquidated damages. They have discussed all these aspects which I discussed with you. They have clearly said the contract has the levy of the tax can be only and only when the contract is to do something or not to do something. It cannot be for some condition which is there in the contract for a breach of which will giving rise to a damage, right to damage. The CBIC circular clearly said this, that on these type of transaction, tax cannot be levied. So they have clarified in case of works contract, etc., etc. They have given a list, illustrative list of 6-7 items. Okay, on this, no tax is leviable, no tax is leviable, etc., etc. But unfortunately, in the last limb, they have identified cancellation of the contract for a couple of things, like hotel industry. That you are booking a hotel, you are booking a flight, and ticket getting cancelled for reasons best known to CBIC. They said, okay, on these account, transaction GST is leviable. Cancellation of a ticket, cancellation of a booking. So I am taking clue from there that the law is made in such a manner that tax can be levied only and only when there is a supply. And supply is with consideration, which prima facie or in my considered opinion is not there in this particular booking cancellation cases. But since there is a CBIC circular, the dealers may face challenges if not paying taxes on it. So what can be the optimum way out? Since this amount is not also very big one, though there are small bites are there with each and every dealer, but not a very big one to take on litigation on their shoulder. So my advice would be, yes, if you have, if you are coming up with these kind of situation, you may pay better to collect tax and pay to the government on this. But at the same time, I have a small piece of advice for the Federation as well, or to FADA, that FADA can take it on their own and maybe take their representation forward to the government on this particular aspect, that why this kind of differential treatment has been given for booking cancellation kind of transaction, unlike others. If the same doesn't yield any fruit, the FADA may try on the judicial forums as well for the benefit of the members. Now let me come to the third case study. In the third case study, the dealer has booked a particular vehicle, let's say for maybe X showroom prices, 10 lakh, 11 lakh something, RTO, insurance, X warranty, first year warranty, some extra items, some logistics, something is there. Total amount is somewhere 12,95,000. Now the buyer has charged, the buyer has paid 13 lakh round figure, chapter ends. He hasn't come back. Maybe your sales representative was so much efficient that he convinced him that it is more than 13 lakh rupees. But somehow, whatever the ground reality is, your debits, that means invoices posted in the books, in the ledger of the buyer is 12,95,000. Amount pending, amount received is 13 lakh rupees. Now there is a credit balance. Now 5,000 rupees is written off as a miscellaneous income. In my humble opinion, please mind, this 5,000 rupee is nothing but in respect of the supply of vehicle made by the dealer. That means on this 5,000 rupees, tax has to be paid, and the rate of tax should be at par with that of vehicle. What is your principal supply? So I have discussed with you three examples of the written off in the three different facts. Number one, if it is a unilateral write-off, that the customer is not coming up for so many years, no tax at all. In this case, the third example which I had taken up with you, there are some extra money which has been received from the customer and to whom you have supplied the vehicle. Then you are writing it off. Tax has to be paid. And then there was a second example which I shared it with you, which cancellation of the booking, you're charging some amount or writing it off, whatever. Nomenclature is not much important. So you are writing it off or charging that booking cancellation amount. In my strict legal sense, in my strict legal opinion, I can say tax is not leviable. But for the purpose of convenience, or since the amount will with the single dealers will not be that much to fight with the government officers, so I'll be suggesting to the dealers that they may continue paying taxes on that till that time. Federation may take some call. on representation or maybe taking it to the courts. Now the next set is ITC on renovation of the showrooms, which is very common in case of all dealers. I'm just taking a typical example that in fact what I'm taking is all the real examples. The earlier also what I taken the example was real, which I received from some client. This was also, I just removed the name of one of the client. What I received is that a client is intended to renovate its showroom. They've estimated that these works are to be done. They were ready with giving a turnkey contract to a contractor that in a single lump sum amount, 1 crore 40 lakh rupees is there on your screen, that in this much of this amount, the showroom will get renovated with these works. Now, what's going to happen? If this kind of contract is there, that renovation of showroom is there, in which maybe some dismantling, demolition will also be there. Maybe some flooring will also get changed. Electricity, door, window, firefighting equipment will get changed. There will be different kind of furniture, etc., etc. A whole new set of showroom will be there. Please mind, no credit shall be eligible. No credit shall be eligible if you are entering into this kind of contract, undoubtedly. Why I am saying so? Please refer section 17(5) clause C, which clearly says that works contract services, when supplied for construction of an immovable property, shall not be eligible to be credited. Because it says, other than in case of plant and machinery, when you are giving a turnkey contract, the outcome is actually a building, which may have some machinery or equipment, but holistically it is not a plant or machinery or equipment, but it is a immovable property being a building. Similarly, the other exclusion is if you are providing the same services to someone else. So the dealer is never providing the works contract services. He is only receiving the works contract services. So no question of any credit in this particular scenario. Now, I'm going to tell you some, maybe, can you plan it? Can you plan your affairs in such a manner that you can get some benefit of it? Benefit out of it. Otherwise, what's going to happen? 1 crore 40 lakh rupees there. And 25 lakh rupee approximately will be the tax liability on it. GST will be there, which is going to be your cost. So let us first understand. I'm just giving you some brief background of the legal provision. Then we'll discuss can you save something? First of all, please mind, and let us refer this section 17(5)(c) once again. It says credit shall not be eligible in respect of following services, namely works contract services when supplied for construction of an immovable property. If there is an immovable property, then credit will not be eligible. Meaning thereby, if the transaction is in respect of movable property, this clause will not apply. Clause C will not apply. Secondly, the exception within it is other than plant and machinery. So second exception is, even if it is immovable or movable, hardly matters. If the outcome is plant and machinery, then also this clause C is not applicable. Fine. Now, one more aspect you may see here is the rider is in respect of construction. Now, construction is defined to mean something which is capitalized in the books of accounts. You may refer definition of given in the explanation, which says construction includes reconstruction, renovation, addition, or alteration or repairs to the extent of the capitalization to the said immovable property. If you are not capitalizing, there is no question of construction. It will not be treated as a construction for this purposes. No credit restriction. You can avail the credit. Fine. Now the question is, what is the immovable property? Now, what is immovable property? This is being defined in the General Clauses Act, and General Clauses Act is applicable to all the other acts as well. It clearly says immovable property includes land, building arisen out of land, and things permanently attached to land, or permanently fastened to anything attached to the earth. That is only a immovable property, not otherwise. So this aspect has been examined in so many judgments. For the paucity of time, I'm not referring much judgment, but you may keep in your mind that if something is attached to the earth for its stability or for better functioning or for operational efficiency, in that case, it cannot be treated that it is permanently fastened to the immovable property and shall remain movable property only. For example, if there is some equipment, maybe kind of crane, maybe kind of vehicle lift, or etc., which are embedded to the earth with some certain foundation, or maybe some kind of screw they are fastened to the earth, that doesn't mean it is an immovable property. Those equipment, machinery still will be movable property if it can be detached without giving are available. If I summarize whole this structure, I can say in this manner, if you are going to renovate something, you are going to, you may be capitalizing something or you may not capitalize something. If you are capitalizing something and it is becoming a movable property, please mind, you are making renovation, capitalizing, and movable property is the outcome. In that case, ITC eligible. Why? Because construction in respect of immovable properties are only restricted in terms of 17(5)(c). If you ask me an example is maybe some, when you are making some renovation, you are having a contract, let's say for making furniture which is modular. You will capitalize it. The outcome is movable. Modular is what? Modular furniture is not a movable property. You can place it here, you can place it somewhere else, but it is capitalized. Then ITC is eligible. Please refer definition of construction given in example. In the explanation to section 17(5)(c) and D, it clearly says construction, fine, of the immovable property. Now, if I say, if it is capitalized to the immovable property, it is an immovable property, but resultant it is a plant and machinery. Now what's going to happen? For example, some kind of lifts. Let us assume it is partaking character of immovable property. Even then, credit shall be eligible because resultant is a plant and machinery. For plant and machinery, this restriction doesn't apply. 17(5)(c). But if it is other than plant and machinery and it is capitalized and it is immovable property, in that case, no ITC. Simultaneously, you can see if whether it is a movable or not, if it is not capitalized, wholly credit is eligible. Whole credit is eligible. So if that kind of scenario is with you and you may plan the affairs in such a manner that you will be eligible to get most of the credit. I can remember in one of the contracts, approximately we substantiated approximately 70-75% of the credit we could claim because of that. We divided the contract to the different vendor instead of giving it to one turnkey contract. So one need to identify if it is a turnkey contract, forget it, no credit. If you are in a position to divide it, you can claim substantial credit of it. You can plan your affairs in such a manner that you can avail the credit. Now I'm coming to the last merit point, which has been raised in the some of the cases which I have received. I am in appeal for those cases. Very interesting issue when I examined it, when I first time I received it. See what happens, most of the dealers are dealing in the used car as well. When you are dealing in used car, apart from your own brand car, and maybe you are getting the other brand's car as well. At times the car are of the such a nature that they are not in a position to be sold as a car itself. So you scrap it and sell it. Now, at this junction, let us examine a popular notification number 8/2018, normally called as margin scheme. everyone uses this particular scheme for a used car, that okay, we are going to pay tax at the rate of 18% or 12% depending upon the engine capacity. If you'll go to this notification, this is the exemption notification, as I already said about it. It categorically uses motor vehicle. And what is a motor vehicle? GST law says, what is motor vehicle for the GST law? Please go to the section 228 of the Motor Vehicle Act. Now, what is Motor Vehicle Act says about it? Motor Vehicle Act says motor vehicle or vehicle means any mechanically propelled vehicle adapted for use upon the road. It is not whether it is using, it is on the road or not. It is adapted for use upon the road. If it is not adapted, if it is not capable of running on the road, in that case, it cannot be said to be a motor vehicle. And how this scrapping happens? The moment you sell the vehicle, as a scrap, the registration number got cancelled. There is a plate which is there, which is called also get removed. And the moment that plate gets removed, the registration is not there. One can say that this is not adapted for use upon the road. And the moment it is the position, it is not a motor vehicle per se. Now, taking this clue, department has made a couple of cases whereby they said, when this plate got detached, it is not a motor vehicle. So you cannot claim benefit of notification number 8/2018, so-called famously known as margin scheme. Because this margin scheme is available when it is a used motor vehicle. The moment you scrap it, it doesn't remain motor vehicle, and margin scheme is not available, and you'll have to pay tax on the sale value, though the rate of tax is 18% in both. But the difference is, in 8/2018, it is 18% of the margin. Whereas in the case of regular tax, it will be 18% of the whole. And you'll agree with me, in all the cases of scrap sale, margin is always negative. So effectively, if we are into margin scheme, it will be a negative value. That means no tax is to be paid in that. But if you are going to pay tax on sale price, it will be huge on. So let's say maybe a 1 lakh rupees only. You purchased a vehicle at rupees 1,10,000. Somehow it is going to scrap it, and it is being sold at 1 lakh rupees, for example. Now, if this notification is available, or the otherwise margin scheme is available, tax is 0. Whereas if margin scheme is not available, if it is not treated as a motor vehicle, in that case, tax is 18,000 rupees. Already there is a loss, 18,000 tax is also there. So I got agreed to a great extent with the department in saying that notification number 8/2018 not available. Correct? Because it is exemption notification, we have to strictly interpret it. So benefit under notification number 8/2018 is not available. But please mind, important aspect, this is not the only place in the GST law where the margin scheme is there. There are 2 places in the GST law whereby margin schemes are there. Number 1, Rule 32 Sub-Rule 5. Please mind, it is available with effect from 1st July 2017, the day GST got implemented. And this Rule 32(5) applies on all dealers of the used goods. Maybe car, maybe other than cars. There was a specific scheme which came for the auto dealers by notification number 8/2018, dated 25th January. It was effective from 25th January 2018 only. It was not available for the period of 1st July 2017 to 24th January 2018. There are so many differences into it. Some of the differences are there, but bottom line is, ultimately in both the schemes, tax is being levied on margin. For example, the tax rate in the 8/2018, which is popular in the auto dealers, the tax rate is 12 or 18% of the margin. Whereby margin scheme under Rule 32(5) doesn't provide for any tax rate. it says whatever the tax rate is applicable on that particular goods will be the tax rate. But the margin is being explained in the same manner. That is sale price minus purchase price. Excuse me. Meaning thereby, you purchased that car at 1,10,000 rupees, you sold that car at 1 lakh rupees. So margin is negative. Whatever be the tax rate, tax is 0. So please remain, and please mind one more aspect. There is no restriction in the GST law that if someone has availed notification number 8/2018, so he cannot avail rule 35 or vice versa. No restriction of this sort is available. So if there is a sale of scrap and a case is being made, I'm sure that you'll you must have faced by this time that there is a case are being made. If it is not, in times to come, this kind of cases are going to be there. So if there is a sale of a scrap car, I agree with the view of the department which is saying that 8/2018 is not available. Yes, it is not available, but please mind rule 32(5) will apply, which gives me the value of the sale of a scrap car, which comes to 0 in our example. With this, I think the merit issues which I wanted to discuss, I have already discussed. Now, allow me to take up, I'll take up only 5 to 10 minutes time on identifying what kind of cares or maybe some basic fundamental aspects about the how to handle these inquiries which are being initiated nowadays greatly in this GST regime. First of all, we have seen that whenever there is a search or inspection proceeding happens at any place, the dealers which have faced it will agree with me. The underlying idea with the authorities comes with a mindset that this much of the amounts we will recover or will get it surrendered kind of thing. Please mind, this approach is absolutely wrong. Law doesn't permit it. Law never permits it. The sequence of a collection mechanism under the GST law is, first there has to be an inquiry. Once inquiry results in that, okay, as per the GST officers, some tax has not been paid, short paid, ITC has been wrongly availed, wrongly utilized, or some erroneous refund is there. If inquiry results in this, then the adjudication proceeding has to start. And once adjudication proceeding gets completed, let us assume the officer is of the view, no, this tax was supposed to be paid. In that case, the recovery can happen after 3 months of the passing of the order, not before that. Not before that. But, and what happens, this search inspection is nothing but a kind of inquiry. There are 5 types of investigation or inquiry proceedings under the GST law. Number 1, by way of scrutiny, which you receive ASMT 10 kind of notice. Number 2, summons. Number 3, audit by the department. Number 4, inspection. Number 5, search and seizure. They are having a different scope as far as their work execution is concerned, as far as their maybe powers are concerned. But please mind, bottom line is these all 5 are nothing but a fact gathering, information gathering exercise or inquiry proceedings. During inquiry proceedings, department cannot resort to recovery mechanism. There are so many judgments on it. There are so many things which are being said by so many high courts. I'm not going, since time is less, I'm not taking it to each and every decision of you, but some of them are there on the representation on this slide. But I would like to take you through with this judgment. That's beautiful judgment. Bundle technologies. In this case, also the same thing happened during the investigation time. When the search was conducted, the forcefully department got the amount recovered from the assessee. The Honorable High Court beautifully explained this aspect that unless adjudication gets completed, recovery cannot happen. And if it happens, it is not it is to be treated as against Article 265. It is the foundation stone of any taxes under the Constitution of India, and also violative of Article 300A, which gives right of property to each and every citizen of India. So this is a beautiful judgment whereby this aspect has been explained. Number two, maybe during investigation or otherwise, the very populistic measure for payment of taxes is DRC 03. And when a DRC 03 is being, tax is being paid through DRC 03, if you are paying it in the presence of the officer, they will always make sure that you point out, you select the tab 74.5, that is voluntary payment. Once this DRC 03 is being paid, the department always takes a stand that assessee has voluntarily paid it. So it cannot be rebutted. The assessee has assumed the liability. Assessee has agreed to the liability. That is why they have marked it as voluntary payment under section 74, subsection 5. Now, I just want to discuss this aspect because so many times when we meet with the dealers or maybe any of the taxpayer, we always see, okay, DRC 03 is there. It marked as voluntary payment under section 74, subsection 5. Please mind, 74 applies when you are admitting that you are making payment due to the non-payment of the taxes was due to the reason of fraud or willful misstatement or suppression of the fact to evade the taxes, first of all. But when 74, whether making payment of DRC 03 through payment making through DRC 03 is a final admission, I humbly disagree with it. Let me share with you the relevant statutory provisions. Please mind, 74.5 itself says that the person chargeable with tax may, before service of the notice, this, pay an amount this on this or the 50% or equivalent of the penalty on the basis of his own ascertainment or the tax as ascertained by the proper officer. First of all, there has to be an ascertainment of the taxes and it has to be informed to the proper officer. First of all, he makes a payment and then there is a information which should flow from the taxpayer to the tax officer. So DRC 03, you are making the payment, but where is the information which is to be flown, which has not been done? Let us say if someone has only made payment through DRC 03, there has to be a second communication. Okay, let's see Rule 142, Sub-Rule 2. It talks about that, okay, it may be treated as the communication through DRC 03, but in that case, the officer has to acknowledge it. Officer has to acknowledge this payment as a token of acceptance and has to issue DRC 04. Until unless DRC 04 is issued, please mind, it has not attended finality. Now, whosoever is listening this webinar, please go and check. Whenever you have filed DRC 03, how many times DRC 04 has been issued by the respective officer in times? You will find in less than 5% cases, the department has issued DRC 04. So until DRC 04 has been issued, the amount which you have paid is not being admitted by the officer and you have every right to claim it back. You have every right to claim refund of that amount. Please mind it. It is not an admission. One more step ahead. If this amount is being paid after issue of the show cause notice, in that case, one more aspect is very important. That once you have made the payment, then the officer has to issue a finding that, okay, he has agreed with your payment. A kind of order has to be passed in form DRC 05, which gives conclusion to the proceeding. And more importantly, please mind, this DRC 05 is an appealable order. That means you can file appeal against it if it was forceful. If you are not agree, but you have made the payment, then you are having every right to file appeal against it. This is what has been conclusively held by the Honorable Bombay High Court recently. Now, if I summarize what I said till now with regard to finality of DRC 03, please understand voluntary payments are of two types. Number one, pre-show cause notice payment. Number two, post-show cause notice payment. If it is a pre-show cause notice payment and you have made the payment by way of DRC 03, then the process is there has to be DRC 03 and then acceptance by the officer in form DRC 04. If DRC 04 has not been issued, you can claim your refund. You can retract, no problem in that. Secondly, if the show cause notice was issued and then you made the voluntary payment, in that case, apart from DRC 04, there has to be an order in form DRC 05, which is directly an appealable order, against which you can directly file the appeal even. Meaning thereby, just because you have filed the DRC 03 during any inquiry or investigation proceeding, it is not full and final aspect. This aspect has been discussed in great detail by Honorable Delhi High Court in case of Vallabh Textile, which is there on your screen, whereby they have said that the officer has not processed the DRC 04, so it cannot be said that they have even accepted the payment. That's very important key aspect of it. One more aspect in the very same judgment, Honorable High Court also find the same thing, that when during the inquiry proceeding, that means kind of a gunpoint, the payment is being made, it cannot be said to be a voluntary payment. So on these things, one may conclude that if you have made any kind of payment during investigation or inquiry proceedings, the game is not over. Ball is still in your court. Please check your rights to claim it back in the manner, two things I have described. Otherwise, also so many things are there. Last thing I'll just touch upon. Now, the recent development in the GST inquiry and investigation is when the officers goes for some kind of this search and inspection more specifically, they seize the cash as well. If any of the officer finds some cash is there, we have seen so many cases whereby the cash has been seized by the GST officer. Question is, can GST officer seize the cash while conducting search and seizure operation? 67 subsection 2. Inspection doesn't have a seizure power, so there is no question of cash seizure. If it has been done, it is wrong. And see, recently I have got one of the cases whereby even the GST officer has seized the cash and made the FDR in the name of DGI itself. I was surprised by seeing that particular case, but there is no such power in my humble opinion. Let me explain it from where it got highlighted. See, GST law provides seizure power for all four things only. Number one, if it is goods liable for confiscation, document, books or things, and please mind, it is in the opinion of the officer is useful for or relevant to any proceeding under the GST law, then it can be seized. So what happened? Honorable Madhya Pradesh High Court, the question, firstly, this question raised before Honorable Madhya Pradesh High Court in the case of Kanishka Mata. What has been argued before the Honorable Court was that cash cannot be said to be a thing. It doesn't gets covered in either of these subject matter mentioned for the seizure is goods. Cash is not a goods, cash is not a document, cash is not a books, cash is not a things. This was being argued before the Honorable Madhya Pradesh High Court, whereby Honorable Madhya Pradesh High Court described or said, yes, things, the term things is wide enough to get this to get the cash covered into it. That is why the things will get covered under the cash will get covered under the term things and can be seized under the GST rule. This is what Honorable Madhya Pradesh High Court has held. Though I, with all due respect to Honorable Madhya Pradesh High Court, I have examined this aspect in great detail with the different laws. In my humble opinion, cash cannot be said to be a thing. I'll just give an example why I'm saying so. You may just have a quick look at the income tax law seizure provision, which clearly says for seizure subject matters are books of accounts, documents, money, bullion, jewelry, or thing. So books of accounts term, documents term, thing are clearly mentioned under the income tax law as well. But apart from thing, they are also mentioning money, bullion, and jewelry. if the thing term is so wide to cover money, what was the reason or what was the occasion for the government to write money term in seizure separately? So this is what one example one can take to understand this aspect. Similar provisions are there under the customs. I'm not entering into it, but this aspect has been dealt in with I would say better detail by Honorable Delhi High Court in case of Arvind Goel versus Union of India, whereby cash was found with the chartered accountant, allegedly found with the chartered accountant of the one of the person who was handling in some hanky-panky in the GST regime. So the question which was posed before the Honorable Delhi High Court was that whether it is a cash falling in the definition of this cash can be seized in it or not. Whereby Delhi High Court has answered that it cannot be termed as a things which is useful or relevant for proceedings under the GST law. I hope you are following me. So, Honorable Madhya Pradesh High Court has restricted its analysis only and only with the term things, whereby the law uses the seizure subject matter as things which are useful or relevant for the proceedings under the GST law. Now, this aspect has been dealt by the Honorable Delhi High Court. They said whatever be the things are, but cash cannot be termed as things which is useful or relevant for proceedings under the GST law. See, any documents, any evidence, any books of accounts can be useful for the proceeding, but what is the relevance cash is being making into it? What kind of help seizure of cash will help in proceedings under the GST law? So this was being beautifully dealt by Arvind Goel's judgment in Delhi High Court. And thereafter, there is a further development to it. Honorable Kerala High Court also dealt this in the same term. They have distinguished they have noted this specifically Kanishka Mata judgment as well, and given the judgment on the path of Arvind judgment. Like in that case, also the Honorable Honorable Kerala High Court has in crystal clear terms said that in GST, cash cannot be seized because it cannot be termed as something which is useful for proceedings under the GST law. Now, the question before them was, okay, maybe it is illicitly collected tax or maybe undervalued tax or whatever be the things are. They clearly said it can be the jurisdiction of the income tax officer, but not the GST officers. And the important point was when they have given a favorable judgment to the assessee side, government filed a SLP before the Honorable Supreme Court against the judgment of the Kerala High Court, whereby the Supreme Court dismissed the SLP recently on 31st July. They have said, no, we will not interfere in the judgment of the Kerala High Court. So meaning thereby, we can say an indirect stamp is there and the judgment of Kerala High Court got finality that the cash cannot be a subject matter of seizure by the GST authorities. So this thing should be kept by you in your mind that whenever any kind of proceedings are there under the GST law, the officers are not competent to seize cash of the dealer. You should be mindful of this. Last thing, in one line, I can say so many times what happened in these kind of proceedings. Under pressure, some of the statements are given by the maybe team of the dealer, maybe some vendor, maybe some other third person. Please mind the statements which are given by third person or maybe even director of the company or maybe even accountant, general manager of the company cannot be used as an evidence until unless cross-examination opportunity has been offered to me. This is what a settled precedence. If you want, you may refer the judgment of Honorable Supreme Court in case of Kalra Glue Factory, whereby Honorable Supreme Court has in one line has cleared this thing that we are going to set aside the whole of the order solely because that cross-examination opportunity was not provided to the assessee. So on all these aspects, we may conclude that just because there is some admission, the tax liability doesn't get pondered upon or unnecessary tax liability cannot be there on any of the dealers. So these things we should be well versed with it. I think with this I can conclude my presentation and we may come up on the Q&A session. Saharji?
Thank you so much, Jatinji. Yeah, thank you. Indraji is there to help and navigate the questions and she'll take it up one by one with you.
Can we have maybe a 5-minute break in between?
Sure, sure.
Yeah.
Just 5 minutes. Am I audible?
Indraji, I think you can now take up the Q&A with Jatinji.
Yes. So there are a few questions with regard to the used cars. So the the questions are basically like if you have purchased a car for an X amount and then you have refurbished it for an X amount, and then when you're selling it, what is the like on what price the GST should be paid?
Fine. Let's give number to the example. Let's say someone has purchased a car for rupees 1 lakh, spent, let's say, 20,000 rupee on refurbishment, sold this car to rupees 1,70,000 rupees. Now, in this case, the question posed by the querist is whether the margin is 50,000 rupees or 70,000. This is what a precise question of the querist, whosoever asked this question. So in my humble opinion, the margin is sale price minus purchase price. Sale price is 1,70,000 rupees. Purchase price is 1 lakh. So margin would be 70,000 rupees. Fine. Now another aspect of the same query should be whether credit in respect of this 20,000 will be eligible or not. In my humble opinion, the credit is barred with respect to purchase, not with respect to refurbishment cost. So credit of this rupees 20,000 shall be eligible. So I think I have answered both way in this query. So one may proceed.
Another question is, if demo vehicle, in case of a demo vehicle, it should be registered. A demo vehicle is registered. Then should
just
it
a
be
minute.
registered?
I think there are some hands are being raised. You may have a check on that, because if the hands are raised on the same query kind of thing, maybe there may be a further or counter query to it. We can handle it right that moment. I'm leaving it on you.
Okay.
So Mr. Manish Agrawal is there and who's raising hands.
So Manishji, I'm giving you the audio rights. If you are available, then I'm allowing you to speak. So you can unmute yourself and now ask your question.
No problem. Let's go ahead if it's not working.
Okay. So the next is on the demo vehicle. If the demo vehicle is registered, then should it be done on the invoice issued by the OEM or registered through normal invoice?
I explained this aspect in great detail. That first of all, in my humble opinion, as per Motor Vehicle Act, registration of the demo vehicle is not required at all. You can move ahead with a trade plate or trade certificate, or maybe different nomenclature might have been given state to state to this thing. So first of all, statutorily, it is not required. Second, even if it is presumed that you want to get this demo vehicle registered, this demo vehicle can be registered on the basis of invoice which is being issued by the OEM to the dealer, along with a sales certificate issued by the manufacturer. And this is what I'm telling you, that I have given this advice to a couple of dealers, which initially they find it is not getting through, but when they persistently tried with RTO, with their manufacturers, now this is smoothly being undertaken by a couple of dealers. Some of my clients, I can say, and that's in the best interest of the dealer.
So the next question is, we have to claim extra ITC in GSTR 3B, then that is reflected in GSTR 2B, as full credit could not be claimed in previous month for want of physical receipt of goods. What should be done?
I don't think so there is any problem into it. See what happens. If you'll go to the new GSTR 3B format, which is the new return filing format, it has a specific clause. There is a table number 4 in the GSTR 3B. Table number 4 has a claim with respect to other details. There is a feature, we can say, that whereby we intimate government that this kind of credit we are not availing as of now. So let's take an example. In the month of June, let's say there are certain invoices the dealer has received which are getting reflected in GSTR 2B of a dealer. Since the goods has not reached to its premises, he doesn't want to claim the credit to avoid the risk. So the ideal way to deal with this is, in the table 4 of GSTR 3B, he claims whole of the credit of all of his invoices, including the one which has not been received in the month of June itself, then there is a disclosure requirement at the end of table number 4. This is under clause D, 4D, whereby you can reverse that okay, we are intimating the government that we are reversing it, and then we are intimating that we are not taking claim of this particular credit. So system is maintaining a data that this much of the credit is already there in the 2B, but you have not claimed it. So when in the next month, let's say in July, you receive those goods. Now, if you are going to file the GSTR 3B of July for the amount, for the excess credit, which you have already earlier intimated the government that this is one is excess, then there will be no problem. So if you are following the procedure protocol given by the GSTN, there will be absolutely no problem. Now let us assume there is a situation when there is a question. I'm sure the situation must be of this kind, that dealer has not followed this protocol in the return filing in the month of June. That means he might have claimed only the credit for which the GSTR 2B is reflecting as reduced by the goods they have received. So when you are going to file the GSTR 3B of July month, that means in the month in which you received the goods. So GSTR 2B is not reflecting the credit. So the moment you claim excess credit, there will be a red flag in the system. Don't bother about it. You claim that credit. Now what's going to happen? There will be a notice which will be given it to you in the form of, this is a recent mechanism which has been, which government has placed in picture in DRC 1C form. There will be you'll receive a notice in the form of DRC 1C, system generated notice. Please mind, within 7 days, respond to that notice and explain the situation that this is the credit pertaining to the earlier period. And then this problem will be with the protocol of the GSTN. You will be asked to clarify this aspect, which you may clarify in a very decent manner.
The next pertains to how do we always pay? Do we need to pay 1% GST in cash on outward liability every month?
Not always. Rather, I would say there may be very few dealers which are required to pay this 1% IDC, because see, there is a restriction which is being provided in Rule 86B that dealer has to pay at least 1% of the tax amount in the form of cash other than electronic credit ledger. But the rule itself provides the exception. The exception is if the dealer himself or maybe any of the director of the dealer, if it is a Karta or if it is a partnership firm, then the partner, Karta, if it is a HU, whatever it is. If even the partners and directors are paying income tax of 1 lakh rupee or more, or even if that dealership itself, in that case, this restriction will not apply. I'm sure most of the dealer, if not all, most of the dealer will be having income tax liability of 1 lakh rupee or more. If not, then their director must be having this kind of liability. This must be paying more than 1 lakh rupee as income tax rupees. In that case, there is no question of this application of this rule. So no need to pay 1% tax in these kind of scenarios. Theoretically, if I'll take the company is not having this kind of income tax liability and none of the director or the promoter is having that kind of liability, yes, in that case, you'll have to pay 1% of the GST liability through cash ledger only.
So the next is on the e-way bill. Whether the e-way bill is required to be made when transporting bike from one dealer to another, or even while one is being self-driving, from one dealer to the other, even if it is on a self-driven carriage. In both the scenarios, what is the...
See, when one reads Rule 138, which talks about a requirement of e-way bill, there may be a prima facie understanding that whenever there is a movement of goods, e-way bill is required. Let me read it for you. It says, every registered person who causes movement of goods of consignment value exceeding 50,000 rupees in relation to a supply or for reasons other than supply shall before commencement of such movement furnish the information and generate e-way bill. This is what has been said by Rule 138. But if we read this rule in this manner, I think this is going to be, this is a misleading interpretation. Rule 138 has been made under the powers of Section 68. Now, what Section 68 says, it says the government may require the person in charge of a conveyance carrying any consignment of a goods of value exceeding such movement as may be specified to carry with him such document and such device as may be prescribed. Please try to understand what law wants to say. Law is saying there has to be three things. Number one, person in charge, one, of a conveyance. There has to be a conveyance, there has to be a person in charge of the conveyance, and conveyance carrying any consignment of the goods. So there are three aspects. One, there is a conveyance. Another, there is a person in charge of the conveyance. Another aspect is that conveyance is carrying some goods. Until unless these three things are there, Section 68 cannot come into operation. Whereby the Rule 138 in a lighter sense says, the prima facie reading says, whenever there is a movement of goods from one place to another, for reasons of supply or for reasons other than supply, e-waybill is required. Please try to understand, no rule can overrule the provisions given under the main statute. So my interpretation regarding e-waybill for these kind of things are, until unless these three things are there, e-waybill requirement is not there. For example, bike is being transferred from one dealer to another dealer. Let us say if these bikes are being transferred in a separate truck, yes, then requirement is there. Meaning thereby, then there is a truck is the conveyance, bikes are the goods, and there is a person in charge of the conveyance. E-waybill required. But let's say dealer is having a bike, a person rides the bike and goes it to the another dealer. Then there are two things only. One is a person in charge, another is a conveyance, where is goods. Or there is a person in charge or a goods, where is a conveyance. So Rule 138 cannot apply in this situation. Similarly, car. If a car is being out from the premises for a test drive, no e-waybill because of the same reason. There has to be three things. A car is being shifted from the warehouse to a showroom or a vice versa, showroom to warehouse. Can e-waybill be required? In my humble opinion, absolutely no. If it is in self-driven mode, no e-waybill. Why? Because there is a person in charge or the goods, where is conveyance? Or if you are saying that vehicle is a conveyance, where is the goods? So three things has to be there. One, person in charge, conveyance, goods, which are transported in the conveyance. So until unless these things are there, e-waybill is not required. Just as a practical experience, I'm telling you, a couple of show cause notices were being issued by the department to auto dealer. Very recently, in one of the cases, the goods were being transported from Haryana to Uttarakhand in one of the client's case. The department made the case on this basis only, that e-waybill is required. There was a huge liability. We have given a detailed representation, written a detailed write-up on this, that e-waybill cannot be asked in this situation when it is a self-driven mode. Fortunately, even the officer at the lower level get convinced with it and they drop the proceedings.
Thank you, sir. So the next is, please explain GST treatment on cashless claims for accidental repairs.
It's actually huge question, but I will try to summarize it in to answer the most, I would say, frequently used model. See what happens. Cashless claim means there is an accident. There is an accident happened, and now the vehicle is in the possession of a dealer for its servicing or repair or accidental repair. The payment commitment is by way of from an insurance company, not by the dealer. Normally what happened, when there is a repair, there is a contractual arrangement between the dealer and the customer, that means owner of the vehicle, to get his vehicle repaired. But when there is a cashless claim, there is a guarantee by the insurance company that we will make the payment, you don't bother the customer about it. So now in principle, the services, though effectively is being provided to the customer of the vehicle owner, but in a GST sense, recipient of these services is the insurance company, not the recipient, not the customer, not the end customer, or the, we can say, vehicle owner. Section 2, subsection 93 is there under the GST law, which says recipient means a person who is liable to make the payment. So in this accidental claim model, it is a person liable to make the payment is the insurance company, not the end consumer, not the vehicle owner. So the invoices are to be made in the name of insurance company. If at all GST is eligible, it will be claimed by the insurance company, not by the consumer or the vehicle owner. So this is what, by this, you can make a notify party to the consumer in the invoice itself, but not the recipient. Recipient will be insurance company. Meaning thereby, whenever your system is going to file a GSTR1, the recipient should reflect as an insurance company, not the vehicle owner. I hope that clarifies.
Thank you so much, sir. So the other question is regarding the customer, whether it is CGST, SGST or IGST, the place of supply. That is also a common query which you can explain, sir.
You have some, do you have some specific fact on this? Because
no, it's simply when the consumer is from other state, whether IGST is to be charged or CGST, SGST to be charged. In similar lines, one or two questions.
See, let us divide this aspect into two parts first. So it's a bit longer question. Let's take some time in a proper manner. And I believe not all the dealers are dealing it correctly. So let's deal it properly. First of all, let's divide it in two parts. Number one, identification of a place of supply for goods and identification of a place of supply for services. These are being dealt by Section 10 and Section 12 of the IGST Act, respectively, goods and services. First, services. Let us say there is a customer. Let us say I'm sitting in Delhi, for example. There is a customer who comes to me for his some kind of repairs or servicing, and the customer is having registered in, let's say, Uttarakhand or Haryana. That means outside Delhi. Now, when I am saying registered doesn't mean registered with RTO, registered with GST department. So he is having a GSTIN, and that GSTIN is out of Rajasthan or out of Delhi. In that case, place of supply will be the place where that registration resident. That means from where that registration number has been issued under the GST law. That means if the GSTIN is of Haryana, dealer is sitting at Delhi, it is going to be an IGST supply for services. Second aspect, let us say that customer is not registered under the GST law. In that case, I will check my DMS. In my DMS, what is his usual place of residence, whether his address is coming of Delhi or Haryana. Please mind, we will check this only and only when we are not having GSTIN. If GSTIN there, we'll go by GSTIN only. No other parameter is to be checked. If GSTIN is not there, our records are showing it customer to be of Delhi or Haryana. If my records, my DMS shows that it is of Haryana, then CGST, SGST. If my record shows, no, it is of Delhi, then if it shows CGST, SGST, if it is of Delhi, if it is Haryana, IGST. If my record doesn't show any address, let's hypothetically take this situation. In that case, CGST, SGST always. This is what all about services. I hope that gets clarified. Now let's come to goods. That means the buyer is buying the vehicle from me. Customer is buying a vehicle from me. Let's say customer is of Delhi. There is no doubt it is going to be CGST, SGST. Customer is of outside Delhi. Now, here I will ask a question. Theoretically, my answer is absolutely correct. Legal law says it will be of the place where at which address the invoice is being raised. Fine. But see what happened the moment of, now let us understand practical side of it as well. If the consumer, if the buyer, whether he is registered under the GST or not, let's take this question. If he is not registered with the GST, then whether I am raising an invoice of CGST, SGST or IGST, it doesn't make any difference for my buyer. Here I will advise to charge CGST, SGST because department will always like to like you to charge CGST, SGST, not IGST. The moment you are applying CGST, SGST, department is happy. But the moment you are applying IGST, they will investigate that transaction, whether levy is correct or not. For the basic reason, because whenever you are going to charge CGST, SGST, it will be the SGST authorities will get the credit, get the taxes in that state. If it is IGST, those state authorities will not get any taxes. That is why they always want you to charge CGST, SGST. But there may be a situation whereby my customer or my buyer is registered one. He wants a GST invoice so that he can claim the input tax credit. So in my humble opinion, you can very well take this charge this IGST. Let me give you the reason, a bit detailed reason of it, because many a time maybe dealers may get in fix that, okay, notices has been issued, etc., etc. Please mind, section 10 subsection 1 says the place of supply in case of goods shall be the place where delivery concludes. Precisely, place of delivery, address of delivery. Now, when I mention an address, let's say Haryana, XYZ place, XYZ colony, Haryana, then ultimate place where this vehicle is getting consumed at that Haryana. It may run on the roads at any place in India, but ultimately the place of that consumption can be said to be Haryana in a general sense as well, more specifically statutorily. One may refer to definition providing section 2 subsection 2 of the address of delivery. Their lawmakers specifically written that address of the delivery is the place which is mentioned on the invoice. So in invoice, the address is mentioned as of Haryana. So there is a deeming fiction that this address will be treated as of place of supply will remain Haryana. That is why I said one can take can have very strong position on it. Yes, IGST can be charged. If department is saying that no, CGST, SGST is charged, you can take a contradictory position. You know, the department is wrong on that. I hope that clarifies.
Yeah, thank you so much, sir. Now there is a question it pertains to helmet. For two-wheelers, the helmet has to be supplied. So the dealers are giving helmet to customers while they purchase new bike, but helmet is getting built from parts distributor, and for same the company increases the margin. So how to make bill for that helmet for deducting from our stock with zero value at 100% discount or with full amount of helmet value? Please guide how to show this transaction in books of accounts.
See, it is exactly same the way we dealt LCD example. The only point is in that example which I discussed in my presentation, that was in respect of input tax credit, not the outward liability. The question is here of outward liability. So see what's going to happen in this particular scenario when you are supplying vehicle. Along with this, maybe due to some statutory fiction, requirement of the law, local police, you are supplying the helmet as well, which is mandatory for them. In that case, please mind my words, there are two supplies. Both of the supplies are taxable supplies. These supplies are made in conjunction with each other in the normal course of business. And naturally, anyone can say principal supplies of the vehicle, bike supply. The moment I take all these four things, this brings to the clarity that it is a composite supply. The moment it is a composite supply, whole of the price which I am charging from the customer, whether I am identifying some amount for the helmet or not, hardly matters. It will be treated as supply of a bike. Let's say 80,000 rupees a bike price. You bill it as 80,000 rupee bike and helmet. You bill it like 80,000 rupee bike, zero helmet. You bill it like 79,000 bike, 1,000 helmet. Hardly it makes any difference. It doesn't make any difference. The tax repercussion is tax has to be charged at the rate of bike, at the rate which is applicable on the bike on whole 80,000 rupees. Just because invoice is 79 plus 1,080 or 80,000 alone, tax rate won't change. So whole 80,000 rupees, 28% GST would be charged, number one. Credit of the helmet purchase bill will be eligible, irrespective of the fact, again the same. Whether you have raised the invoice for zero, some concessional amount or full amount hardly matters. So it's not going to make any difference. Now let's come to some accounting treatment. Because what happens, the challenge with the dealers are, or maybe some systems or DMS or maybe some their ERP, whatever they are using, at times it doesn't permit entry with zero number. So let's say if you are going to make an invoice, some amount has to be there. So my advice would be, you can just make it, if your DMS permits, many a time it doesn't permit, but let us say your DMS permits, you may make a single invoice, 80,000 rupees, bike and helmet both, chapter ends. If it is not being permitted in your DMS, then you may invoice your whole of the transaction as 79,900 rupees as bike, 100 rupees for the helmet, and by this way your helmet inventory will also get moves out, because there is an issue of inventory as well, because dealer wants to maintain the inventory of the helmet as well. So some amount should be assigned to the helmet for better handling of the accounting and inventory management.
Now the next question is on the rate of GST on service of denting and painting, and the other is service of handling charges on motor vehicles.
See, denting, painting, I don't have any doubt. It is clearly a 18% tax rate. There is no plus, no minus, because denting, painting is happening nothing to do with the sale of the cars.
Yeah.
Once the car has been sold, there is some accident, maybe there is some scratches are there, then the person is coming and maybe some dent paint exercise is being happened. The people may refer circular as well, which also says if you are making separate invoices of goods or services, I will say please refer that circular completely. Circular also clearly says that every transaction has to be identified on the basis of facts of the transaction. In any of the denting, painting transaction, when the customer is coming to you, precisely they want a service of painting, they want a service of denting. If at the time of painting you consume some of the paint item, it doesn't make you are selling the paint. Paint is getting consumed. Maybe oil is also being used in this painting exercise. It doesn't mean oil is being sold to you. So in my humble opinion, it is completely purely a service transaction. No need to pay tax differently on the goods or services. You can directly say it is a service, 18% tax rate. Coming to the handling charges, this is what a bit typical exercise. See, so many judgments are there under the pre-GST era as well, that nomenclature doesn't make any difference. First of all, just because you are terming it as handling charges, it's not giving any answer for what purposes this amount is being charged. Couple of dealers term it as a logistic charges. Still, it's not giving a correct impression for what purpose it is being charged. So by nomenclature, it cannot be decided whether it is what treatment is to begin. First of all, we need to understand what kind of that transaction is. For example, let's say you term it whatever, you term it reimbursement, you term it handling, you term it logistics. See, if I ask for what purpose it is being charged, couple of cases I got the answer, okay, because before sale, we are moving these goods from our warehouse to showroom to delivery. Maybe before delivery, we are making a PD check, pre-delivery check, or maybe some cleaning, specific cleaning is to be done. That is why this amount is charged. Please mind, if these are your answers, if these are your facts, please refer section 15, subsection 2, clause C, which clearly says any amount charged for anything done in respect of supply of goods or services at the time or before delivery thereof will be included in the price. So precisely whatever amount you are charging is not charging for anything else as per GST law. Rather, it is for the vehicle itself. It is to be added in the value of the vehicle. Please mind it. Now let's take a different scenario. Now the scenario is, let's say some dealer answers. Let's say I'm asking again why you are, what is this handling charges? And the dealer answers, or their document answers in this manner, that we are charging this amount for the purpose, for assisting the, the customer in their vehicle registered. Now this is a different scenario. Please mind, there may be a presumption or maybe a thoughts in thoughts in the minds of every person dealing in this industry that first vehicle is getting registered and then it is delivered. Please mind, it's wrong perception. As per Motor Vehicle Act, first there is a delivery. After that, application of the registration is getting filed. Delivery is first, then there is a application for registration. Maybe it may be termed as a constructive delivery. Constructive statutory delivery, because before that, application for registration cannot be filed. So once there is a invoice is being made, the buyer takes delivery, maybe constructive, not physical. Thereafter, the application for registration is filed. So now in this way, what happens? Whatever services, that means assistance in registration, is not given before or at the time of delivery, rather it is after the delivery is being given. Now there is a difference now. Now see what it is not getting covered by section 15 subsection 2 clause C. So if any one of you are having any VAT era cases, which is still going on, so many cases I am having still pending. So I can tell you that we have also argued and got the favorable judgment, whereby we can say that it is not getting covered into the sale price or a value of the goods, and it will not be chargeable to VAT. But the problem with the GST is there is a new section which was not there earlier. Section 8, composite supply, treatment of composite supply. When these two supplies are composite in nature, then they are to be taxed as a single supply. And in my humble opinion, the logistic charges which you are charging for, even for the getting the vehicle registered, it is provided in conjunction with each other, both the supplies. One of them is obviously a principal supply and both are the taxable one. So it is in the nature of composite supply. So my advice to all the dealers would be that better you charge the tax rate which is applicable on the respective vehicle, not otherwise. This is what a future I'm telling you that this way. I'm consciously aware that so many dealers have charged the GST at the rate of 18%. My advice would be that you change your practice and charge the GST on those charges as per the rates available at the rate applicable on the vehicle. Due to paucity of time, I'm not explaining, but I don't want any dealer to pay the past liability as well. I'm sure that for all, you believe me, on all India basis, these cases are going to be made for the dealers. Whosoever has charged 18% on these logistic charges, in times to come, department will make the case against them, and department will make a demand for the differential amount of tax. So what I'm suggesting is for future transaction, you may change your pattern, but for past transaction, at this stage, at least I don't want to say that you just make your payment from your own pocket, because see, in future transaction, you can charge it from your customer. But I don't want to say that for the past transaction, you paid from your own pocket, because there are so many, I can say, loopholes are there in the law. The way law has been made, the way a couple of circulars are there are reasonable room to say that one may win in the battle of the court. Even if I'm giving my opinion on the merits that it is chargeable at the as a composite supply at the vehicle rate of the vehicle. But even then, when it can be recommended on a case-to-case basis that whether you should pay for the past or not once the show cause notice is received, not before that. There are good room to say that if I have to say in a numbers, I can say even the cases which I'm expecting more than 80% cases would be the one which the department will make in a weak manner, and the assessees will be able to fight them successfully and may not have to pay tax from their own pocket. There are so many reasons behind that, so many judgments, which I'm not discussing due to paucity of time.
Then there is a question, GST on warranty item. Is it taxable as per HSN code, or there is any specific special HSN 20%?
I think your voice got cracked, but what I understood is you're asking for the tax on warranties, correct? Is
Yes,
it
yes.
no? See, warranty claim is nothing this is not a warranty. Services is which has been provided by the dealer to someone else. That dealer is not providing any warranty services. So it is being provided by the OEM. Dealer is receiving some amount against the services which he has provided under warranty, number one, or the goods which he have supplied under warranty. So in FADA journal itself, I have wrote an article on this particular warranties. One may refer that. And even after that, there is a circular which has comprehensively covered all these warranty aspect has been covered, and they are both are then fine. When I wrote the judgment, there is a classic judgment of Tata Motors on this warranty, which covers all those aspects. And then circular is there, which both are in sync with that. There is no confusion. If the dealer is providing any services under warranty for which he is going to receive the amount from OEM, he is not charging the service amount from the customer. That service rate, that means 18%, which is the standard rate, will be chargeable on service component, and it will be invoiced to OEM, not to customer. Similarly, what we dealt with the insurance aspect. Similar, if the goods are being used or supplied while executing that warranty performance on behalf of OEM, then the dealer may send an invoice in the similar fashion to the OEM if he has applied his goods in that case. And the rate of tax again will be of that respective goods, nothing to do with the service rate. So accordingly, that may be handled. Exactly like what we discussed for the insurance claim.
So then there is a question on loyalty. When customer accumulates point on sale and service of vehicle and points get redeemed as gifts, how should it be treated?
Very subjective question. Need to, because different OEMs are treating it as differently. See, I can tell you one thing only. Please mind this: loyalty points can be have an asset in the hands of a customer, but at your end, it is nothing but a service, maybe a barter in a service itself. So if you are giving some goods, it is just like a supply of other goods. Tax rate will be same, no change in tax rate. You will have to identify the value, and the best way to evaluate the value is open market value. That means, for example, a customer is having some loyalty points. I'm just taking in one of the example because different companies are treating this loyalty in a different manner. I'm just narrating one of facts to make it clear. Let's say a customer is having some loyalty points. He came to a dealership or a company whereby he is going to redeem that point by, let's say, a helmet is given to him, or maybe some other item, maybe some jacket or something is given to him against that loyalty points. Now, what got to happen? The dealer has given that article, maybe jacket or maybe helmet or maybe something else. And that loyalty points are getting redeemed by, it is being transferred from the customer to OEM through dealer. So this is the transaction which is not in money. The moment transaction is not in money, we will have to value it. Supplies of that article only, maybe jacket or maybe helmet, what we have taken the example. So tax rate which is going to be applied will be of jacket or helmet only, respective tax rate. Value, you will have to identify that at what price you are selling this jacket or this helmet to an independent buyer. Value will be that one. I hope that gets clarified.
So can we take one question more?
I don't have any problem.
Okay. Okay. So then they're saying spare parts damaged, but insurance companies are not getting GST on spare parts insurance claim. Is it correct? Then insurance company cannot ask for spare parts invoice.
I couldn't actually understood whole of the transaction. Come again, please.
So they're saying that spare parts got damaged, but
Fine.
the insurance company is not getting GST on spare parts insurance claim. Is it correct? Then insurance company should not be asking for spare part invoice.
No. I don't think. See, I think whosoever asked the query is highly guided by the treatment of the ITC in the hands of the insurance company please mind the treatment of insurance company of the ITC in the hands of the insurance company cannot govern your GST treatment. If as per contract, you are supposed to, the insurance company is supposed to make you the payment, make the payment to the dealer. In that case, the recipient is the insurance company only. As I already explained, section 2 subsection 93 says recipient is the one who is liable to make the payment. I've already discussed this. So if it is a cashless claim, in cashless claim, let's say you have supplied goods of, let's say 1,000 rupees, 1,000 plus 28, 1280. This is what your invoice, and it is a cashless claim. Then you will have to raise an invoice of 1,000 plus 280 to the insurance company. What is the treatment in the hands of the GST company will not alter your invoicing mechanism. Similarly, if it is, let us assume it is not a cashless insurance, rather you are providing services to your customer, to the vehicle owner, and he will take insurance claim whatever he is eligible. So you will raise the same invoice 1,000 plus 280 to the customer. Whether insurance company is reimbursing him GST or not hardly matters. This is, dealer should not ponder himself into this aspect whether the recipient is able to get the credit or not. Not at all. They should not.
Then there is a question pertaining to Rule 41 of Motor Vehicle Act. In case demo vehicle suffers accident or any third party death or of the driver, then will the benefit of insurance claim be taken? Can it be taken?
Yes, absolutely. Yes, absolutely.
And then
that question is nothing to do with GST. It is a Motor Vehicle Act question.
Yes, yes. Is credit card cashback liable for GST?
Credit cards cashback? No, in my humble opinion, no, no liability under GST. The basic question lies again the same thing. What kind of services you have provided when you have received a cash card claim back? One need to identify. If you want to levy GST, there has to be a supply. When you received a claim back, let's say you make the payment from a credit card, Paytm, you got some amount back. What services you have provided? What goods you have provided? Nothing. No GST can be there. This amount may be treated as an income in your P&L account, but GST is not an income tax. GST is a tax on supply. You have to identify what is supply.
Then the last question is scrap, spares, consumables or oil, etc. Sale, is it taxable? What is the rate of GST of service or workshop center?
All what you have said is maybe some supplementary services, scrap sale, and one more thing you told, I forgot that.
Consumables.
Yes, all these scrap. Yes, yes, all these are taxable. Nothing is free. Please mind the rate you can find in your rate schedule. A different item according to different things. The rates are different. No uniform tax rate is there. Number one, services uniform tax rate is 18%, but goods are having a different tax rates. And please mind, under GST law, the supply is the one when it is in the course or furtherance of the business. And the business is defined in section 2 subsection 17 in a very broad manner, which says business includes any trade, commerce, manufacture, profession, vocation, wager, everything is included. Then there is a extended clauses as well, which says any activity or a transaction which is incidental or ancillary to the main transaction, main business, that is also business. So the moment there is a consumable, the moment there are some unused items, the moment there is some scrap, selling of this scrap or maybe unused consumables may not be your core business, but it is a transaction which is incidental or ancillary to the main business. That is why it is also a business for the purpose of GST, and GST will be charged. The same analogy will apply for the claim of the credit as well, because for the credit also it has to be in the course or furtherance of the business, and the business term is widely defined. So tax will be laid, scope of tax is huge, so the scope of input tax credit. This is what the difference from the earlier laws. I think with this we can conclude.
Yes, sir. Thank you so much, sir, for giving so much time and explaining in depth, and most of the questions have been And I'm sure all the participants would have gained a lot. Mr. Damani, now you can take it.
Before
So
that, if I
Jatin ji-
may take just 30 seconds. Yes, thank you, Indraji. Thank you, Saharji. Thank you, whole team FADA for giving me this opportunity so that I could share some of my thoughts with all of you. If any other queries are available, you can share with the team FADA. We'll try to respond them as much as possible. Thank you. Thank you very much.
Thanks a lot, Jatin ji, for all the insightful session which you always take for FADA members. We have a few, I think we'll look into the Q&A box, and if there are open questions which have not been answered already, we'll share it with your team so that members can be answered back. With this, ladies and gentlemen and members of FADA, we come to the end of today's webinar. I hope there was a good amount of learning which happened in this topic of GST, which is an ever-evolving subject. We'll keep doing such webinars in future also. But till that time, we'll take your leave. Wish you a great weekend ahead. Thank you.
Thank you. Thank you, everyone.